Hi guys, how are you? My this one Titanium, founder of Investing MMT and the co-founder of Pure MMT for the 100% Beyond Domains, along with my friend Edward Delzio, the author of the National Debit, a must-have book for anybody that wants to learn how the monetary system works, how macroeconomics works, and that's what I teach on Patreon at patreon.com/mindthisone. Come down, it's $5 a month, and mostly it's for the trolls to keep them out. And I teach people how to apply that into the real world and how to use that information to also not only apply it in the real world but use it in investing if that's something they choose to do. So let's do another one of these Bitcoin videos. It's the first of the year. Happy New Year to everyone. Let's take a look and see what's going on. Before I get started, for those of you who have not seen any of my previous videos, there's an Eiffel Tower structure that occurs that is common in all bubbles. And typically what happens is you get the thrust up, then you get a thrust down move, you get a lower high, and then it comes back down. You form this falling M pattern, if you will, and then it just kind of collapses. And right now we're somewhere in here. Okay, that's where we are right now. So let's take a look, and I'll show you that on the chart. Okay, and here it is. So you can see, right, we have rolled over. We have that M pattern in play where it shot up, came down, bounced, all right, and now it's coming back down. Okay, so you have that M pattern falling. And then the next thing that usually happens is the whole thing just collapses. All right, so this is what I'm talking about in Bitcoin. Now let's put it on log. When you put it on log, you can see things a little bit clearer, and you can also do some analysis with it. So let's go down to a 1 hour. All right, here we are. So I said that when it was falling apart a couple Fridays ago, that you should be looking for a buy somewhere down here. Okay, because it is part of the bigger structure, the channel, right? And let me zoom out, right? This is the channel. It kept going up and down, broke out, and now it's coming back to test. There is a pattern where you break out, you test it, and then you go. So it will be a breakout, a test, and then you go. Okay? That's the bullish case. The other bullish case is this, that the structure falls apart, okay? It bounces, and you get a 1, a 2, and a 3, all right? And then this is bearish. Why? Because the market always shows you something that you're not expecting. And we said a couple videos ago that this is going to end up to the downside, and that's exactly what happened, okay? Now, since we rolled over and started to go lower, now we have a bigger structure, which is a falling wedge. Again, if we apply the same rule, that it's always going to deke, then this is bullish, okay? Except for one small little caveat. When this occurs at the top, usually it falls apart because of the Eiffel Tower pattern, okay? So the likelihood is this is going to fall apart. And once it comes back into the structure inside the channel, usually what it does is it's going to fall apart, and not only is it going to break to the upside, but it will break to the downside as well. Okay, so that's why we're saying, hey, this is probably a top. But again, if you're going to be on the bullish side, then the way I would probably handle it is like this: that take my profits, thank you very much, sayonara, bye bye, okay, and put a buy order up here, okay. Because if it breaks out, then you can participate in it because it's going to go to the moon. It's not going to stop. Okay, it can go 40, 50, 60,000, whatever. And I'll give you a couple of examples. This is the first example. See it back here, right? It did whatever it did, and then it broke out. Off to the moon it went. See what I'm saying? It did the same thing back here. In fact, this one is actually better, and I'll tell you why it's better. Because this one, okay, came down, and it created a flag. So it broke out, created a flag, took a dump, right? Held this support area, and then off it went. Done. Okay, this gave you a chance to get in. So it's done it before, and it can do it again, absolutely. But again, this has no fundamentals. This is a Bitcoin. It's not a coin. Okay, it's a currency that nobody accepts. It's the craziest thing. But like they say, never underestimate the stupidity of a large crowd, right? Okay, so um, our bias has to be to the downside. We have to be thinking negative because of the structure, Eiffel Tower structure. And as you can see, it has formed, since it's broken down. It went a 1, 2, 3 up into this pennant, came down 1, 2, 3 up, fell apart. Now we're back outside the structure, and it keeps failing. All right, that's not a good thing. Now, what I want you to pay attention to is that everybody inside this shaded area is now underwater. Anybody who bought in here is losing money right now. And believe me, these people are not the kind of people that are, to the moon or to the end, and it's not people that have any kind of profits. It's not people that, took some profits, came back in, they're a little bit up on their position, and okay, let's hold on and to the moon or to the end bullshit, right? So when these people who were probably anti-Bitcoin, they didn't buy lower, they were hardcore, fuck Bitcoin, blah, 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 and then they just couldn't stand the fact that their friends were making money and they wouldn't shut the fuck up. So then they converted, and started buying Bitcoin somewhere in here. Okay, they just couldn't stand it anymore. So now they're buying it, but guess what? They're losing. They're losing, and right now they're like, damn it, I knew it. I shouldn't have fucking bought that thing. Now, the point to understand about that is that these people usually puke it up. They're not gonna hold. They're not gonna go out and buy a car, or buy enough one Bitcoin that's not a coin, for the value of a car, and then watch that car just disappear right in front of their eyes. These are the more risk-averse types of people. Okay, so now that they're all underwater, okay, the likelihood is they're going to puke it up. And when they puke it up, the first area, like I said in the previous video, is around, down here. Okay, and it usually gravitates to the 10,000. For some reason, stock prices or Bitcoin or anything that trades is attracted to round numbers. Okay. And that's why in the previous video I said, is it going to go to 10,000, 5,000, and so on? Because there's a tendency to just gravitate to those round numbers. So would I buy in here if it came in and bounced? Maybe you can take a little swig at it. But according to the structure, down here would be a better risk reward. Okay. So again, if you were to count this, it will be a 1, a 2, and now we're looking for the 3 to come down here. Okay? And that's typically not good. Okay. So, the other obvious, anybody that knows anything about charting, and believe me, none of these people are investors, none of these people ever bought anything. They don't know anything about fundamentals, charting, they don't know anything. That you have a head and shoulders pattern, and the neckline is going downwards, which means this is likely going to come lower, if I am right. And believe me, I don't know what's going to happen. I have no clue. I don't have a crystal ball. I wish I did, but I can only tell you what charting is saying. Now, again, I'm going to emphasize that you're better off taking your money, take your profits, do whatever. If it breaks out, great. Buy it, take it. If you think it's a good risk reward that you're going to buy at 13,000 and you're going to sell it at 26,000, a 1-to-1 risk reward is not worth it. I want to tell you right now, I would not do it. I would not be willing to lose $13,000 to make $13,000. Okay? let's say it goes to $36,000 or whatever, 3 times your money. Still, it's not worth it. It's not worth it. And I think people are realizing that. And yes, there's 7.4 billion people on the planet, and you can always find some other loser that's going to go out and buy it, until a certain point. And the higher the price goes, the less of these people you're going to find. And the more it starts doing this crazy stuff at higher prices, it's not the same thing as saying, oh, I'm losing $1,000, $2,000. That's okay. But when you start losing, $5,000, $10,000, people panic, especially the new buyers. So, do what you want. I'm not a financial advisor. I can only tell you what charts are doing. And as I said, all these people are underwater, and now this structure has broken. So again, likelihood is lower. That's it for now. Again, if you're interested in learning more about bare knuckle charting, which is something that I've developed, I don't use Elliott waves. I use some concepts of Elliott wave, but that's not what I do. Even though it might look like it is, come down on patreon.com/mindthisone. Join $5 a month. Like us on IMMT and Pure MMT for the 100%. Join us. We'll talk about macroeconomics, monetary system, and also investing. That's it for now. Thank you. Happy New Year, and I'll talk to you soon. Bye-bye.